Hello guys, I think we can start now. Yeah, can you guys hear me? Raise your hand if you can hear me or, yeah, nice, super. Yeah, so my name is Anthony Kembati. I work for Hisa. I'm a financial markets analyst at Hisa. And we decided let's have webinars to teach people and to talk to investors and just to understand what they need to know and the issues that need to be addressed. And so this is one of many webinars we're going to be doing. So the first few webinars are going to be more, let's say, an intro type of structure. And as we progress, we're going to advance to more intensive financial stuff and investment options. I hope you guys are excited. I'm so excited to have you guys and to teach you and to guide you on how to invest. Okay, so as you all know, we recently launched Kenyan stocks on our app. So excited about that on Tuesday. And as if that was not enough, the CMA recently gave us a go-ahead to allow fractional shares on our app, which means now you can buy small fractions of shares of companies listed in the Nairobi Securities Exchange, yeah, on our app, right? So because of that, I decided let's have our focus for today on the Kenyan stocks, the Kenyan market, so that you guys can understand what the Kenyan stock market entails and basically what to expect, where to invest, and how the market works. So I want my focus for today to be on the Kenyan market, basically investing 101 on the Kenyan market. Let me share my screen and yeah, let me share my screen. Can you guys see my screen? Perfect. So before investing, you need to know how the Kenyan stock market works. And I don't know if you guys know that, but the stock market has been considered one of the largest money generating machines of all time. Yeah. I know most of you guys have heard of guys like Warren Buffett. These are guys who made a lot of money in the stock market. And these are guys who people look up to when they're talking about the possibilities and the opportunities available in the stock market. So we can talk about the Kenyan stock market without understanding the whole ecosystem of the Kenyan stock market. How does it work? Who are the various players? And what happens on a day-to-day basis in the stock market? So as you guys can see on my screen, the general Kenyan stock market ecosystem looks like this. So we have CMA at the top, we have NSC and CDSC, and then we have the CDAs, who are the brokers, we have issuers, we have the registrars, and then we have the investors. The investors are me and you. So let's start by looking at CMA. Who is CMA? CMA is a regulating body, and simply put, CMA stands for the Capital Markets Authority. CMA is a regulating body charged with the prime responsibility of supervising, licensing, and monitoring the activities of all market intermediaries, including the Nairobi Securities Exchange, the CDSC, and other market players. Other market players, I mean brokers, custodians, all market players. So at the top of this ecosystem of the NSC is CMA. CMA is the watchdog of the market. So I want you guys to know that because I want to paint a good picture of how the market works. So CMA is the watchdog of the market. CMA regulates all players in the capital markets. Okay? So you're always told that when looking for a stockbroker, please ensure that the stockbroker is regulated by CMA. I know some of you guys have participated in the Forex market. You know, you're told if you want to look for a good Forex broker, you need to look for a broker that has been regulated by CMA. So we have a list of brokers in Kenya. Not a long list, but we have a few brokers. A key mention is Faida Investment Bank. Faida Investment Bank is our partner. I'm going to talk about that later. But anyway, Faida Investment Bank is our partner, and you can see the other brokers that are available. So that's it for the CMA. CMA is the watchdog of the market. Let's go to the Nairobi Securities Exchange. The Nairobi Securities Exchange is the marketplace. This is where the buyers and sellers meet. So we looked at the watchdog. The watchdog is at the top, and now we have the market, which is the NSC. The NSC is the marketplace where buyers and sellers meet. Actually, the NSC is the largest stock exchange in East Africa, and actually the fifth in Africa. It's valued around 23 billion USD, but this figure often changes because of valuation and the movements in the market, but basically around that figure. So, what NSC does, NSC provides an automated platform for the listing and trading of multiple securities. And when I mean securities, I mean the assets. We have bonds, ETFs, rates, and the normal stocks. So it offers a trading facility basically for local and international investors and issuers who are looking to gain exposure to the Kenyan market and basically the African economy. The NSE has 63 companies and a variety of sectors. I don't know if it's 11 or 13, around that number, the number of sectors we have in the NSE. So we have various sectors. We have the agricultural sector, automobile sector, banking, commercial, energy and petroleum, insurance, investment services, manufacturing, real estate, investment trust, and ETFs. Okay, I told you guys I wanted this session to be interactive, so this is where you guys teach me. So I want someone to tell me what an ETF is, and someone else to tell me what a real estate investment trust is, and someone else to give me examples of some of the companies listed on the NSE. Sasa, you can unmute yourself and talk. Susan, unmute your mic.
Sorry, I do not understand how to use the whatever unmute function, but I've seen the prompt. I actually don't have a question for now, just trying to use it. Thank you.
No problem. Destiny May. Okay, Sam.
Okay. Mine is just to make a comment on the companies listed on the NSE.
Okay.
I think, we know the big players, the Safaricoms, the Bamburis, KCBs.
Yeah. Nice. That's nice. Actually, the four companies he has mentioned are some of the biggest movers in the market. They actually are always on the movers list in terms of liquidity in the market. So, is there anyone who wants to define what an ETF is and what a real estate investment trust is? I see some. Okay, so let's not spend a lot of time on that. But anyway, an ETF is a basket of various securities. It can be bonds, currencies, stocks. And what happens when you invest in an ETF, you're basically investing in a basket of various commodities. Like we usually have the VOO, or rather the Vanguard S&P 500 ETF, which basically tracks the price of the S&P 500, which has 500 of the largest companies in the US, okay? So when you're investing in an ETF, you're basically investing in a basket of stocks. For a real estate investment trust, they're normally called REITs. So when you talk about REITs, most guys think to invest in real estate, you have to own an apartment. That's not true. You can invest in real estate without actually owning an apartment. And this is done through investing in real estate investment trust. A REIT is basically, these are companies that have invested in real estate, let's say like hotels, apartments. And then what they do is they allow investors to pool funds together and invest in the company just as you would buy the share of a stock. Or if you don't want to unmute yourself, you can just type in the chat. I mean the stock of a company, pardon me for that. A good example of that is we have the Stanley I-Rate, which is listed on the Nairobi Securities Exchange. And we also have the Akon I-Rate. I don't know how many of you guys know about Kwetu Apartments, the student apartments. Kwetu Apartments are actually owned by a REIT, actually part of a REIT. So these are some of the industries that we have in the NSC. You guys are going to see an image of some of the companies. So we have like Crown Paints, KCB, Nation Media Group, Williamson Tea, Kengen, Bamburi, Kenya Power. I know some of you guys know this company and these companies anyway. So I told you guys I wanted to be interactive. So I want one person to guess the best performing company in the NSC in 2022 from January up to now. Anyone? Raise your hand. You can guess. You don't have to be correct. We'll correct you. Okay. Galaxy, give it a try. Okay. Let me have Diana.
I'm thinking Kengen.
Okay. Okay. Nice. No, it's not Kengen.
So KBC, KCB.
No, it's not KCB. One final one. Okay. Galaxy.
Safaricom.
No. Another one. Sam?
I was going to say KCB, Standard Charter.
No. Ernesto?
Equity.
Equity. No. This is interesting. David Chalo?
And general?
What?
And general?
No. Let me just tell you. The company that performed the best year to date is called Olympia. So let me type on the chat. It's called Olympia. So what Olympia does, Olympia actually is in the construction industry, if I'm not wrong. They deal with, they're called PVCs, basically construction materials, the things you need when constructing a house. They've actually been the best performing counter. And let me teach you a new word, guys. When I say counter, when talking about companies listed in the NSC, we don't say stocks or companies, we call them counters. So Safaricom is a counter, KCB is a counter, Kenya Power is a counter. So Olympia has been the best performing counter year to date. It has gained over 40%. Actually, when I checked yesterday, it was around 50% year to date gains. But the number keeps on changing because of the volatility in the market. But anyway, Olympia was the best performing stock. Okay, that's a huge lesson that's really important when investing. There's a friend of mine who is a research analyst, and there's a saying he always likes to use: don't buy the name. Okay, don't buy Safaricom just because you know Safaricom. Don't buy KCB just because you know Safaricom. Make sure you do due diligence and check the performance of the company, the financial, the fundamentals. And if you want to go deeper, you can also check the technicals. But anyway, that's it for now. I hope you guys have understood how the NSE works. The NSE is basically the market where the companies are listed. And Olympia has been the best performing. The next player in the market we're going to learn about is the Central Depository and Settlement Commission, CDSC. Now, this is where the problem is. I know most of you guys are wondering what a CDSC account is. Why do I need one? So don't worry. By the end of the webinar, you guys will be aware and will be much aware of what's happening in the markets and why you need these things. Okay, so don't worry, I'll explain these things at the end. The Central Depository and Settlement Corporation is a limited liability company that's licensed and regulated by the Capital Markets Authority. Remember CMA when we were starting, to provide automated clearing, delivery, and settlement services for transactions carried out at the Nairobi Securities Exchange, as well as holding of listed and non-listed securities, including other documents of title on behalf of investors. So what does CDSC do? The CDSC provides a centralized system for the transfer and registration of securities in an electronic format without the necessity of physical certificates. Okay, let me break it down for you. Before 2004, when you owned a share or when you bought a share of a company, you used to be given, you used to have physical certificates. You used to have physical certificates. So the physical certificates were the ones that proved you actually own the share of a company. There's someone who needs to unmute their mic. Let me check. Someone, Daryl, unmute. Mute your mic. Perfect. Okay, so I was saying before 2004, when you owned a share, you used to be given a physical certificate. And I think by now you guys can guess how daunting that was. Okay, so in 2004, we had, in the year 2000, Parliament passed the Central Depository Act, which allowed the setting up of CDSC. Then came 2004, that's when CDSC started its operation. Basically, what happened is the CDSC was established mainly to establish trust, and the goal was to convert these physical certificates we had for shares into an electronic format, just to make it easy, because we were moving into a more digital economy. We needed to have our shares in a digital format. And this happened mainly between the year 2012 to 2014. This is the year where all listed securities, and by securities I mean bonds and shares at the NSE, were converted into electronic format and stored in the CDSC. So what happened is, let me explain it as a beginner, the way I would explain to a 5-year-old kid. CDSC is basically a basket, or rather a storage. This is where shares are stored, I mean. So CDSC is a basket. Just the same way as a bank stores your money, this is where your shares are stored. And that's why you need, let me compare it to a bank. A bank is where your money is stored, right? And so when you open an account, you need to open an account with a bank, you get an account number, right? So what does the account number help with? The account number helps with identifying this account belongs to Kevin, and this is the amount in his account. That's the same thing with a CDSC number. So a CDSC number is simply an official trading identifier number that every investor needs to be able to buy and sell shares in the Kenyan stock market. So you can get one by opening a new trading account with a licensed stockbroker. And don't worry, we're going to talk more about that in the stockbroker section. So I need to get some questions from you guys about CDSC. Raise your hands if you have questions about CDSC. Sam?
Yes. Now, when it comes to getting a CDSC number itself, I think we will talk about this a bit later.
Yeah.
Is there a digital way of getting or registering for a CDSC account?
Nice. That's what I'm actually going to talk about in the next segment.
Okay, thank you.
Sawa. Okay. I think by now you guys understand what we have so far. So we have talked about CMA, the regulator, and then we have talked about NSE, the market, basically where the buyers and sellers are going to meet. Having CMA at the top, regulating the markets. Then we have the markets now, NSE, and then we have the CDSC, which is the storage. Sawa. The regulator, the market, the storage. Let's now talk about stockbrokers. This is the interesting part, and this is the part that I think most of you guys have been waiting for. Okay, so what do stockbrokers do? Brokers act as the middlemen who facilitate trading on the NSE. Please note that you cannot, as an investor, as an individual, let's say as Sam, you can't go to the NSE and buy shares directly. So you can't go to the NSE and buy shares directly. You need a middleman, and that's where stockbrokers come in. Sawa. Okay, so most brokers have allowed the opening of a CDS account online through their trading platforms. Hi. So I want you guys to concentrate and to be keen on this because it's going to get a little bit technical, but I hope you guys understand. Okay, let me now guide you on how local stockbrokers facilitate trading in the NSE. I remember the stockbrokers I mentioned at the beginning of the presentation. There's stockbrokers that have been licensed by CMA. So some of them have trading apps, and by trading, I mean have trading applications that allow you to open a CDS account and buy and sell Kenyan stocks on their platform from the comfort of your phone. A good example is the Hisa app. Ready, guys? Are you guys ready? So, a good example is the Hisa app. And what we did as the Hisa app, we partnered with Faida Investment Bank to make it possible to invest in Kenyan stocks from our app. So Faida Investment Bank is a broker. Note, Hisa is not a broker. Hisa is a trading app. Hi. How is this possible? Hi, brace yourselves. This is made possible by the use of an API that is plugged into the CDSC system. Okay, let me give you time to digest that. So an API stands for an application programming interface. Let me repeat that again. An API stands for an application programming interface. So an API is usually a way of two or more computer programs to communicate with each other. It's a type of software interface that offers a service to other pieces of software. Let me put it in simple terms. It's a software that allows two applications to talk to each other. So what the API does, it creates a link between the Hisa app, the app that you guys are using, and the CDSC system, which is the depository of shares. So what happens? I've told you CDSC is the storage or rather the depository. I hope you guys can start connecting the dots. So the moment I connect the app to the depository, I think you guys can now see how it's possible to open an account on the app, but actually, like technically, you're opening an account at CDSC. You get what I'm saying? So the API allows the Hisa app to plug into the CDSC system, hence allowing new investors to open a CDS account directly on the app. Let me give you a brief history of what used to happen. Traditionally, you needed to fill out a form, which is called a CDS1 form, when opening a trading account. So during the COVID-19 pandemic, most brokers were like, hey, no, we can't continue doing this because guys at home, guys are not coming to the office, so we need to find a solution. So what the brokers did, the brokers petitioned CDSC to allow them to connect their trading app with the CDS system so that it would be possible for investors to open an account with CDSC online. So that's how the system works. So the API allows the moment I know most of you guys have interacted with the Hisa app. When you open when you click on the invest button in the Hisa app, you will find a button written CDSC. Basically, when you're clicking on that button, it's the API that's allowing you to access the CDSC system. I hope you guys understand that. Hi, let's go to a common question that most guys will ask. Most guys will ask, will I lose my shares? Let's say if the Hisa app goes down and we no longer have Hisa, will I lose my shares? Or rather, let's say Faida Investment Bank decides we're no longer operating. The answer is no, you will not lose your share. Why? This is because your shares are stored in the CDSC system in a digitized format and not by the broker. If you guys remember what I taught you guys at the beginning, the CDSC is the depository. The broker is just an intermediary allowing you to access the market. So the broker just acts as the middleman who allows investors to access the market. Now, simply put, CMA is the regulator at the top of the market. NSE is the market where the buyers and sellers are going to meet. Faida Investment Bank is the broker or the intermediary who allows the investors to access the market. So the Hisa app is the trading app that allows investors to access the stock market. Note, the Hisa app is facilitated by the Faida Investment Bank. And then finally, we have the CDSC, which will act as the storage or the basket for the shares. And just like a bank account, a CDS account then helps a CDS account then helps identify the different shareholders and the share that they own in the depository system, just like a bank account would help identify different customers and the amount of money in their accounts. I hope I'm clear up to there. This is why you need to open a CDS account to be able to buy shares in the NSE. So once you open this account, you are able to access the market through the broker, which is Faida Investment Bank, who often will have a trading application, Hisa App, to make buying and selling of shares easy and efficient. I hope you guys are okay with that. So let me get some questions. Okay, I can see someone, who's that? DC?
My question is, what if you already with FIDA, does it like connect automatically?
What
if you already with FIDA directly, does it connect automatically to Hisa?
Yeah. Actually, when you go to the app, that's where I'm going. That's what I'll be talking about in the next segment. We have a connect account button on the app, on the Hisa app. So you'll just type in, you just type in your CDS account and then click connect. I want some comments. I want who has understood the whole system, how the system works. I just want to see if you guys have understood what I've explained. If you have understood, just raise your hand. Nice, some understood. Nice, 3 hands. I can see 3 hands. Clifford, Charles. Nice. Okay. So let's talk about how to open a CDS account on the Hisa app. So can I give you guys a chance to open your apps? Okay, no problem. Anyway, so to open a CDS account on the Hisa app, when you open the app, you'll see a button written invest. So click on the invest button on your Hisa app and then click on the CDSC button. When you click the invest button, you'll see Kenyan stocks, US ETFs, and then you'll see CDSC. So click on the CDSC button, and then you'll see a place where you are asked to type in your CDS number. Please note, I've been seeing this issue with a lot of guys. You know, like let's say for my CDS number, it starts with 55662. So I'll start by typing 50. No, you need to type the 5 zeros before the CDS number. Make sure you use the 5 zeros before the CDS number. If you had already opened one, just type in your CDS number, like the guy who has told me he had already opened one, and then click connect. If it's your first time opening a CDS account, I believe there's a box below where you're supposed to type in your number. Just check the box below the CDS number segment, and then you'll be directed to an open new account segment. And then you'll get a CDS account connected notification on the app once the process has been successfully completed. And the final step is usually clicking the create trading account button, basically to finalize the whole process. So, let me shed some light on a few more things, and then we can have a short Q&A session, and then we can call it a day. Okay, there's a question that most guys ask. Is it possible to change your broker? Is it possible? Yes, it's possible to change your broker. And I think by now you guys understand why it's possible to change your broker. Because I've told you guys, your shares are not held by your broker, but your shares are held in the depository system. And the brokers are just facilitators, they're just intermediaries. So what happens is you can change your broker, but your CDS account remains the same. Please note that. So the first CDS account you got the moment you created an account, I know some of you might have already created CDS account with other brokers. You will have that CDS account all through, even if you change the brokers. Okay, what used to happen traditionally, to change your broker, you needed to fill another CDS form. Actually, there are many CDS forms. They're actually like around from CDS 1 to CDS around 8 to 9. I'm not sure about that, CDS 1 to around 8. All the CDS have a function. There's a CDS when it comes to transfer of shares. There's a CDS that comes to opening an account. There's a CDS that comes to maybe moving of shares to another person, all those things. So when it comes traditionally, what used to happen when you wanted to, let's say, change your broker, you needed to fill a CDS 4A, B form. And what used to happen is that you would go to your broker, fill the form, and then take the form to your other broker, your new broker, the one you want to move to. but that is being reviewed to make it possible to do it online. It's in the works. And I know you guys, when you open the Hisa app, you are seeing a button written transfer shares. That's why we're going to do that once that is finalized. Let me talk about settlement. Most of you guys might not know, but settlement is basically the process that marks the official transfer of shares to the buyer's account and cash to the seller's account. So the moment you buy, the shares are not yours immediately. That's for the Kenyan stocks. For the US stocks, it's a different story. For the Kenyan stocks, the moment you buy, the shares are not yours immediately. Traditionally, what happens is this process takes, I keep on saying traditionally because, as you all know, the president has been really keen on bringing changes in the market. So much is changing. So I might tell you something today, a few months later, it's different. Like, the process has been changed. So traditionally, what used to happen is the process used to take T+3. The process takes T+3 days in the stock market, which means that after buying shares today, that's the T, those shares will legally be yours 3 days after the day of purchase. So let's say you bought shares on Monday, the shares will be legally yours on Thursday. I hope you guys have now have a basic overview of how the market works, and I hope you guys now understand how Hisa works. Okay, let me get a few questions and then we can call it a day. And one thing I hope is that I hope you guys are now more confident to invest because you now understand what happens and why you're investing, where is your money going to, what are these shares. Okay. Diana has a question. Please unmute your mic.
Hi.
Hello.
So you said you can connect from one trader to Hisa.
What?
You said you can connect your CDSC number from one trading account to your trading account to Hisa.
Yeah.
So I was asking what exactly you need to do because I've been trying to type the number.
Yeah.
It hasn't been responding nicely. It keeps saying error.
Or did you put the zeros?
What zeros? How many zeros?
Okay. Have you ever gotten a CDS report, the monthly report on your CDS account?
No, it was just a registration, barely a month.
Oh, okay, because like for mine, I actually had the same issue. My CDS account is like 50. Normally, what I see is 50, 566 269. But when I check in the CDS report, my CDS account actually has 5 zeros before the 5. So basically, 0000505666529.
So I try that.
Yeah, you can try adding the zeros before the CDS number.
So thank you.
Okay, welcome. Sam has a question. Sam?
Yeah, thank you so much for taking us through this.
Yeah.
You made it extremely simple.
Okay, thank you.
Just 2 things.
Yeah.
When it comes to now someone like me who wants to try and open a CDS account for the first time, I know sometimes the app can have its hiccups, and usually when I attempt to open, it would give me a very cute animation of a dragon, and then it will get stuck at 50% for a very long time.
Yeah.
So you'd suggest that the best way for me to do this is go to like FIDA, for example, and just open manually, or would there be another alternative when it comes to signing up online that you would know of?
Oh, okay, sawa. Okay, I'm actually going to take your case personally, and I think you can send me your email on the chat, and then I'll try sort you out, work with the product team on our side, and we'll open for you a CDS account. But actually, the best way is to do it online because personally, what I know is most brokers right now, they want you to open an account online. They're trying to do away with the whole thing of going to fill physical forms and all that.
Yeah.
So send me your details. Send me your details on the chat, and then I'll sort you out.
Okay, so thank you. So
or can I type in my phone number on the chat, and then you can text me on WhatsApp?
Yeah, that's actually better. Yeah.
That's better. Yeah. Let me type. It's like you had a second question.
Yes. Now, with regards investing, of course, that's the onus is on us to do our own research and learn these things on our own.
Yeah.
But will Hisa, or can Hisa eventually in time provide lessons on, as you talked about, the rates, the all these other, I forget the technical term, the umbrella term for all of those markets. Will Hisa provide sort of like lessons or walkthroughs onto investing on them?
Yeah, actually we already do, but we're going to make it more intensive and more engaging. So far, if you don't know, Hisa and Kenyan Wall Street are one. Let me type that on the chat. KenyanWallStreet.com. When you go to that website, you'll find many articles on different topics. And actually, I'm a writer on Kenyan Wall Street. I write articles, and you'll find some of my articles. I've actually written articles on most of these topics. So there's an article I wrote on investing in ETFs. There's an article I wrote on investing during inflation. There's an article I wrote about dividends. There's an article I wrote about how to buy bonds in Kenya. You will find all those articles on Kenyan Wall Street. On Kenyan Wall Street, we have various segments. We have the Kenyan news, blah, 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 finance. Mostly we find it on the market segment. Just go to KenyanWallStreet.com and just search anything you want to know, rates, ETS, we have articles on that. But we have also integrated that on the app. I think on the app, you can access the news part. Let me check. Okay, but anyway, just go to Kenyan Wall Street, you'll find all information there, the articles, everything. You have so many articles on that.
Okay, thank you. I don't know if it's the way my Zoom is set up, but I'm not able to see any comments on the webinar, on the chat.
Okay. Just type Kenyan, like Kenyan, and then Wall Street. Yeah, one word. Wall Street is WALLS.
It was particularly with your contacts, because the contacts that I'm not able to. I don't know why.
Okay,
yeah,
my number, Ernesto.
Yes, I wanted to know about foreign stocks.
Foreign stocks.
Yes.
Okay, nice. We'll do a webinar on that. I didn't want to have an information overload for you guys, but I can just do a simple touch on that. We actually have so many foreign stocks, and just as I have explained to you guys about the Hisa partnership with Faida Investment Bank, we also have a partner in the US called Drive Wealth LLC. You can search. So by partnering with them, we were able to provide Kenyan stocks US stocks for Kenyan customers through the same partnership, just as I've explained about our partnership with Faida. And what happens is if you can check on the app, we have grouped the stocks into various categories. I think that would be my topic for the next webinar. We have grouped the stocks into various categories like growth stocks, dividend stocks, we also have US ETFs. When you read the article, you get to understand what an ETF is. So we have growth stocks, we have ESG stocks, we have value stocks, we have dividend stocks, we have energy stocks, we have so many categories. And the reason why we group the stocks into those categories is for most of our customers are beginners. They don't know where to start. They don't know, should I buy Amazon? Should I buy Facebook? Okay. Do you guys want me to go through that? I have an article on that. I think we can go through it in like 10 minutes. Raise your hand if you want me to go through that. I thought it would be too much for today. Nice. Okay. Let me share my screen. Okay. As we wait for the the article to open, let me just do it offhand anyway. So we have various stocks that are available on the app, as I had said, and when it comes to investing, what you need to look at is to look at basically the economic environment we're in. And I think most of you guys right now know that we're experiencing high inflation rates. I hope I don't get too technical for you guys. We are experiencing high inflation rates I've been in the country and even globally. And what happens, there are stocks that do well during such times, during high inflation. And during high inflation, the stocks that usually do well are the value stocks. So during inflation, please avoid growth stocks. Growth stocks, what's the difference between growth stocks and value stocks? Don't worry about the categories. When you go to the app, we have categorized the different stocks into different classes. So growth stocks are stocks like Akinet, Tesla, Amazon. Basically, these are stocks that are growing way above the market average. Yeah. Okay. These are stocks that are growing way above the market average. Their performance is way above the market average. And most of guys prefer growth stocks for they're highly profitable because they move fast. And a good example of growth stocks is basically all the tech stocks, the major tech stocks. When it comes to value stocks, these are stocks that I would say they're sort of like undervalued. These are stocks that most investors will go for value stocks when they want the small but consistent profits. Yeah. So the growth stocks are for huge and fast gains, but the value stocks are for small and consistent profits. So what happens during inflation, the growth stocks are usually really affected. And if you guys have been following the news, you can see there was a time that Facebook actually fell 70%. Yes. Okay. I think you guys can now see my screen. Can you guys see my screen? So I was telling you guys, we are currently experiencing high inflation globally, which normally has a huge effect on how various stocks perform. And what happens when you know this, you need to reconsider your investment style and the type of assets you hold. So during inflation, what you need to do is you need to adopt a method of investment known as value investing. This is an investment style that tends to do well during inflation. So what happens is value investing entails the practice of identifying and buying stocks whose intrinsic value is significantly below or lags behind their share price. So when you guys go to the app, you'll see various value stocks. And when investing, you also want, during inflation, you need to go for inflation hedges. Okay. So what are the various inflation hedges? We have the dividend companies. You'll see dividend stocks. We have consumer staples, the financials, and the energy companies. Okay, when I say consumer staples, I mean companies that no matter how bad the economy is, people are still going to invest, people are still going to use the products. A good example of consumer staples would be agricultural companies. Okay, agricultural companies are good consumer staples because no matter how bad the economy is, guys still need to eat. When it comes to financials, I'm talking about the banking sector. No matter how bad the economy is, guys still need to use the banks. When I talk about the energy stocks, let me tell you guys something. Since 1973, the energy sector has been the sector that performs the best during inflation, the energy sector. So I'm talking about the petroleum companies. And actually for this year, there was a chart I was looking at, and I was saying that there was a time all sectors in the market had performed poorly, and it was only the energy sector that had performed well, gaining, I think it was 1.13%. So these are some of the things you need to know when looking to deeply be invested in the US market. Apologies, I'm really going quite fast because I didn't want to touch on this right now because I might confuse you guys. But anyway, let me just touch on it. And then another place you can look at is look at companies that are experiencing post-pandemic rebounds. And basically, these are companies that, like the travel companies, the leisure companies, and hospitality. If you guys have been checking the news, you saw the recent announcement by the airline called, is it Lufthansa? I think it was 3 days ago. They're looking to hire 20,000 more people. And I think basically when a company is hiring more people, the company is usually preparing for a growth phase. I think you guys are seeing the tech companies are actually laying off people, and this other company is actually hiring people. I think those are some things you can observe. And then there's another one that I've not written here, but let me add. You guys saw the COP27 meeting. The world leaders agreed that they need to invest in environmentally friendly projects. So you guys can look at the ESG stocks. ESG basically stands for environmental, social, and governance. Basically, this is an approach that makes sure that institutions have a focus on the environment in their activities. Like they basically, yeah, let me just leave it at that. For ESG stocks, we actually have a category on our app called ESG stocks. You will see that when you click on the invest button. And then I was actually looking at the market today, the top movers, and they were actually pharma and healthcare companies. Since 2020, since the pandemic, pharma and healthcare companies have been performing well. And I want to give you guys an assignment. I want you guys to go to the app and check the top movers. Actually, the top 2 companies are actually pharma companies. They are companies that are involved in, let's say, lab tech and the development of drugs. So just a short run through, we have said invest in value stocks, invest in dividend stocks. Dividend stocks are basically stocks that give consistent dividends. Invest in consumer staples, invest in energy stocks, and then invest in companies that are experiencing post-pandemic rebounds, basically the travel and hospitality companies. And then you can also invest in ESG companies. Basically, for a layman, ESG is companies is a focus on environmental issues. So check for ESG companies. Also check for pharma and healthcare companies. I think I'm going to leave it at that. And then another thing you can do is invest in ETF. I've told you an ETF is a basket of stocks. So what happens is, unlike investing in a single share, you might invest in a single share and then the company just loses value. So a good hedge for your investment is to invest in ETFs. So what investing in ETFs does is it gives you the benefits of diversification. So I told you guys we have the Vanguard S&P 500 ETF, which tracks the price of the S&P 500 ETF. The S&P 500, which tracks the price of the S&P 500 index. This index tracks the price of the 500 largest companies in the United States. So basically, when investing in this ETF, it's like you have invested in the 500 largest companies in the US. Okay, that's what an ETF means. So we have many ETFs, and I'll talk on that in another webinar so that I can do a whole breakdown of everything. So another thing, I don't know if you guys have heard about gold. Actually, there's a saying that I really love. They say that gold is God's money. Yeah, gold has been there before money, before all these other ways of exchange of value. And what happens is during hard times, gold is usually considered a safe haven by investors. So investors will say, I think we are experiencing hard economic times. Let's invest in gold as a hedge against inflation. And you don't have to buy real gold for you to say you have invested in gold. You can just invest in exchange traded fund, or rather an ETF that tracks the price of gold. For Kenya, we actually have a gold ETF in Kenya. Yeah, it's called the Absa New Gold ETF. When you guys check on the NSE list of companies, you'll see we have the gold ETF. Another thing you can invest in is real estate. I talked about trades, and these are basically public companies that own real estate or mortgages, and they offer a good way to invest in real estate without actually buying properties. For most of the times, real estate has been a tried and tested inflationary hedge. Sasa, I think, let me see if this one will open. This is a good article to go through. Okay, a quick run through. Let me use this one. I've told you guys to avoid growth stocks, which are particularly sensitive to rising interest rates. Okay. Go for value stocks, which tend to perform better than growth stocks in high inflation periods. Okay, and then I've told you to invest in dividend stocks. A dividend stock is a public traded company that regularly shares its profit with shareholders. Here I've actually given you an example of various stocks. So for growth stocks, we have stocks like Tesla, Shopify, Netflix, Amazon, Alphabet. Alphabet is Google. For value stocks, we have stocks like Berkshire Hathaway. For Berkshire, it's owned by Warren Buffett and his partner Charles. I don't know, it's Munger or Munger. I can't remember. It's okay, but just know it's owned by Warren Buffett. And at the beginning of the lesson, I told you guys about Warren Buffett. So we have Berkshire Hathaway, we have Nvidia, we have AT&T, we have Pfizer, the vaccine one, and we have Procter & Gamble company. For dividend stocks, we have good examples. We have Xerox, we have Chevron, and we have Johnson & Johnson, and we have JP Morgan. Okay, you can also invest in energy stocks. I've told you guys since 1973, energy stocks have been the top performing sector during periods of high inflation. And this trend has continued and held true in 2022. When you look at the S&P 500, so I told you the S&P 500 has the 500 largest companies in the US. So what they do for the S&P 500, just like in the NSE, they group these stocks into various sectors. So we have the energy sector, we have the real estate sector. I think you guys can see on my screen. We have the healthcare sector, we have the industrial sector, we have the financial, we have the staple sector, all the sectors. And as you guys can see on my screen, the one which had a positive return was the S&P 500 energy sector. Okay. I've talked about utilities, healthcare, investing in commodities, investing in real estate, and I think that's it. Let me go through ETFs. Let me see if it will open. Anyway, let's do that for now. Let's close it at that for now. I hope you guys now have an idea of, can I get some questions or comments before I end the meeting? Vaz, talk to us.
Hi.
Hello.
So, this is a good start for me.
Yeah.
I'm currently in forex trading, but I'm looking into going into stocks. So I bumped upon Hisa and I got interested. So that's why I'm here. I'm hoping to learn more and definitely invest in stocks.
Nice. I'm so happy for you. I actually have some experience in the forex market, and it's always good to meet new traders.
Nice to meet you.
And nice to meet you. I hope you have learned a lot today.
Yes, it's quite insightful.
So you guys can go to kenyanwallstreet.com and you'll find my articles there. Just go through the articles and trust me, you learn a lot.
Okay.
So
definitely.
Yeah. Ernesto, talk to me.
I need to get a hold of that article.
I just go to Kenyan Wall Street. The articles are there. I've posted them there. Just look for Kenyan Wall Street. Just search ETF. You'll find my articles there.
Where the website or?
The website, yeah, KenyanWallStreet.com, KenyanWallStreet.com.
Isn't it then better to invest in ETFs than individual stocks?
Oh, okay, interesting.
Yes, and
Okay.
then now just finally,
Yeah.
I think you should organize the way you've done one for Kenyan stocks, like just organize one just for foreign stocks.
Definitely, I'll do that.
Okay.
Okay, is it better to invest in ETFs? He's saying it's actually now, from what he has heard, it's even better to invest in ETFs than individual stocks. Well, that's quite interesting. Okay, so I would say it depends with the kind of person you are. If you want to passively invest, and by passively invest, I mean just put your money and leave it at that, go for ETFs, because ETFs now will give you exposure to a whole industry, a whole group of stocks. But the good thing is, when investing in a single company, you are actually more likely to get more gains, because if it's, let's say for a company like Tesla, I think you guys can see, if you look at the charts, you'll see the movement of Tesla from March 2020 to March to 2021 was huge. So I think for me personally, ETFs are mainly for passive investors. But if you want to be an active investor, it's good to diversify. Just have some ETFs and have some individual stocks. The thing about ETFs, you see, ETFs are more like a weighted thing, like a basket. So of course, in a basket, there will always be good performers and the bad performers. So it's good to have that for let's say the long term. Actually, the S&P 500 has returned an average of 10% yearly return since its inception. So you can have that and then find some individual stocks, like 1, 2, 3, 4 stocks, now for the bigger gains, for bigger profits. Yeah. I hope I've explained that well. Ernesto.
Sorry, just maybe just for further clarification, like let's say your goal is to get dividends.
Yeah.
Is it better to go for an individual dividend company or an ETF dividend, an ETF that gives out dividend?
Okay, both are good. Even if you are investing in an ETF, you still receive dividends of all the companies that are offering dividends in the ETF. So there's no difference. It's just a variety. It's you're spoiled for choice, basically. Daryl?
Hi.
Hello.
I asked a question on the chat. I don't know if you see on the Q&A. This Q&A.
Okay. Daryl, let me see. Oh, okay. When I have a question, when ordering shares, what does market rate, buy stop, and buy limit means? Interesting. Okay, we actually have an article on this. I think I'll send you the article. Daryl, you have my number?
Yeah, I'll send it when you get it out.
So I'll send you an article on it, but just going through it, and a short, simple overview what market rate, buy stop, and buy limit means. For market rate, it means you want to buy the stock at the current price. So if the stock is currently trading at 120 USD, you're going to be filled in at the current market price. So the difference between a market rate and the buy stop and buy limits is, for a market price, you are sort of not in control. You'll just be filled in accordance to the market price, the best price available in the market right now. For buy stop and buy limits, you're the one who sets the price where you want to buy the stock at. So you can say, I don't want to buy the stock at 120. Let me wait until I believe the stock is going to go lower and go to 100 USD. So you can set 100 USD. So when the price goes to 100 USD, that's when you'll be filled and your trade will be put in the market and you buy the stock at 100 USD. That's the difference between the market rate and the buy stop and buy limit.
All right. Thank you very much. Yeah, I'll ask you more questions on WhatsApp.
Okay, no problem. How long? Okay, and let me see. Ernesto had asked about investing in foreign stocks. I've answered that. There's a question on brokerage fees. Okay, for Kenya, when it comes to brokerage fees, For US stocks is usually 1% per trade for US stocks. And what happens is the US government has a 30% withholding tax for dividends. For like investors who are investing outside the US, 30% tax on dividends and a 1% fee on the trades. 1% fee on the trades. For the Kenyan stocks, there's usually a market cap, like CMA. I told you guys about CMA. So the market cap, the cap for the fees is 2.1%. So what happens? I've told you guys about all the players we have in the market. So all the players take something small in the 2.1%, but the fee is not supposed to go above 2.1%. So on average, I would say we charge 2.2% 2% fees. No, these are not brokerage fees. These total fees per trade, 2%, like a maximum of 2.1%. So in that 2.1%, that's where all the players are going to get their cut from the 2.1%. Okay. How long does it take one to get the CDS number? Typically, you're supposed to get a CDS number within 24 hours if it's online. But there might be some issues, but typically you're supposed to get your CDS number within 24 hours. Yeah, I think that's it for today. Can I get two people to just give an overview of what they have learned, and then we can call it a day? I'm so happy that this was such an interactive session, and I'm so happy to see you guys learning. I need two people to give an overview of what they have learned and what they expect in the future webinars. Raise your hand, and yeah, two people, and then we're done for the day. Can I select randomly? I have one. I have some. Okay, some.
Yeah, I guess for me,
Yeah.
My two main takeaways
Yeah.
that I was looking for was the ease with which we can actually get CDS accounts opened.
Yeah.
And I think the effectiveness or the benefits of investing in ETFs and just let all of these very, very diverse markets that you guys offer.
Yeah.
So those are particularly my main takeaways. Okay.
Thank you so much. I'm so happy you are one of the most active guys in the session. So yeah. Anyone else? Ernesto, you had so many questions. You have to be the one who's going to give us the closing remarks. Ernesto, talk to us.
Thank you so much for the session.
Okay.
It was really insightful, and I look forward to the engagements. I actually downloaded the app, but I've never really used it.
Okay.
Yeah. I've just been trying to do my own research, especially with the foreign stocks and all.
Okay.
Yeah, and I look forward to further webinars.
Okay, nice. The articles are going to be really helpful. You don't need to fear the markets. Now with the articles, you'll be good. You'll be good to go. You'll have an idea of what to do. So, guys, have an amazing day. Once again, my name is Anthony Kembati, a financial markets analyst, and it was nice having this webinar with you. And yeah, see you next week. We'll have another one like this one. Tell your friends to join, and yeah, have fun investing, and all the best. Bye.